Oh, aloha everyone. Joshua Hayes at bigwavetrading.com. Wanted to do another weekend update, this time with the overall market. And also, I have two new long positions I'm going to give to everyone watching this video lesson. But do me a favor, if you appreciate the free long signals that I'm giving out, give me a thumbs up or subscribe or ring the bell, whatever. Any kind of love is appreciated. That being said, let's get straight to the overall market analysis. So I have made mention on these video lessons, basically, nothing ever changes with me. What you see today is what you got 10 years ago, is what you got 20 years ago. Now, obviously, you have to adapt to the market situation. Obviously, the methodologies flow in and out of favor. But I've made mention over and over that the best times to be getting long the market for me is when I have the monthly TSV bullish on the SPY and IWM. We have that. That's what this green box here is. Then the other thing that I always needed for my really amazing gains and for me to increase size was a VIX below 20. We have that, and we'll look at that here in a second. But really quick, I want to show you. We basically have everything lined up everywhere. Unfortunately, short-term we're extended, and we'll review that too. But look at the SPY. This is the daily. Look at the green box. Look at the weekly. Look at the monthly. That's perfect uniformity. That's great. That's what I want to see. The DIA, same thing. Daily, weekly, monthly. Wonderful. QQQ, daily, weekly, monthly. But of course, here's where the tricky part comes in. IWM. You'll notice it's basically gone nowhere since early February. This is the area of the market that I mainly focus on. We're good on the daily. We're good on the monthly, but I've made mention over and over, the best time is when the weekly and monthly are both bullish. Of course, the IWM, bearish. And there appears to be no turn yet in this lead line. Signal line is still trending lower. TTM trend momentum is moving lower. So keep that in mind. That's why my end of day account portfolio didn't rip this past week, even though the SPY, QQQ, DIA did. Our quarterly portfolios did very well the past week. But still, as long as the IWM is lagging, there's going to be a little bit of an issue. So with that out of the way, I'm going to show you the VIX. With the VIX, we are not only below 20, but we're following through with that move below 20. Initially here, we flirted with 20. We hop back above it. We move lower. Now, with all of the TSVs lined up bullish, that's great. And with the VIX below 20, that's great. But there's a serious problem right now. Look at the SPY. We have a beautiful moving average stacked, but we're even extended from the 5 exponential moving average. We're at a 3 standard deviation move to the upside. Bullish sentiment, while not extreme, is still very bullish on multiple indicators. I look at all the Goldman Sachs indicators that they follow and look at the average, and it's at the upper end of the be careful up here range. So the SPY, look at that extension. That's pretty crazy. The DIA, same thing, not even touching that 5 EMA. That's the 9. I believe that's the 13, 21, 34, 50 SMA, 100 SMA, 200 SMA. So at least we had the moving average stacked. But once again, everything's extended. The QQQ, same thing, extended. Love the moving average stacked. Now I'm looking for the pullbacks. But the IWM, what I'm hoping happens is we see that rotation out of the SPY, DIA, QQQ to the extension, and that money finds a home in the IWM, and the IWM starts moving up. If that's the case, what I would love to see here, do you notice that the VIX is getting, now I know that right here it had a little bit of a lower high, but do you notice that since then, the highs are getting lower and lower? I would love to see if the market pulls back, if we could get another lower high in this VIX. By the time we move back lower, I'm thinking everything should be lined up. All I'm waiting for now, some very, very pretty charts and or flawless setups in stocks that are not necessarily pretty charts. Right now, I don't have that. Unfortunately, nothing has really lined up telling me to really push it. I continue to trade under the status quo of max 1R risk per trade from my buy stop to sell stop. 1R is 1% of my total account value in this end of day account. So that's how I'm going to be operating still moving forward until I can get a great chart. And just a reminder of what a great chart looks like. Let me show you. Need a chart to exactly look like this. If you are a member at bigwavetrading.com, or if you watch one of these videos and you see me post a chart that looks like this, you know that I love it. You know that I'm going 5R, 10R, buy stop to sell stop. And or if I ever get this signal again, because I didn't think they would be so rare nowadays. Look at the year that this is, 2019. That's how long it's been since I've gotten another signal like this. There's been some that have been close, but not like this. You can better believe, since they're so rare nowadays, next time I get a signal like this, I'm going all in on whatever capital is remaining in this end-of-day account, because I know that I got odds and probability on my side. I've got all my past big winners on my website, stocks that I've been long that have looked similar, and you can see the vast majority work out. And if they fail, my stop loss is right here, the lowest low of the support level. Now, as we know, WTRG had a nice little move higher. I believe that's its high coming up right here. That's probably the high right there. Yep. So the problem with this signal back in the day was it was a utility stock, and that's why, even though it was perfect and it moved up 22%, it was only 22%. So I'm looking for patterns like that, and I just don't have that right now. Now, that being said, I'm about to give out 2 stocks that I'm going to get long on Monday. One I already have orders lined up and set because it was a signal on Thursday. It just didn't trigger on Friday. But I just want to remind everybody of some of the recent selections. FUTU was given out as a new long signal back here, and to its highs, it produced a 390% gain. I also gave FUTU out as an ad signal here, and while it initially worked higher with the ad signal, it did eventually roll over and fail by closing below this level right here. But other stocks that I've given out publicly that have worked is OFLX, from the signal to the high. That's a 26% gain in 1 month, actually, only 1 month. CROX was given out as a public signal on this day. And you can see just from here, we'll just use that as an arbitrary high. That was a 68% gain. And then UPWK was given out on that day as a new long signal, the ad signal. And once again, didn't produce much, but still you got 11% out of it before it's now reconsolidated. Signal is still true. You see that white arrow because I'm still holding it as a long position. FUTU. You can see I've gotten another ad signal on, and since this ad signal on FUTU, we're up 38% on that ad signal. But the last 2 that I gave out was WK, and it was, I believe, this signal right here. It initially worked higher, but then failed. Hey, that's all right. What is that loss? 4%. That 4% loss to compare to all those gains that we saw, not too bad, right? This is why we always cut our losses small if we're wrong. And then WK, I think that's the one I just showed. VECO was the other one. VECO was a new long here. And once again, it ended up failing immediately too for a 3% loss. So a 3% and a 4% loss compared to that 60%, 11%, 20%, 130% gain. You're starting to get the picture. You could even be wrong. I would say 70% of the time with my methodology, and only have a 30% win-loss ratio. And if you're tight with your stops the way that I am, over a span of 100 to 1,000 trades, you're going to be making a lot of money. So with that out of the way, there are 2 new long signals that I want to give out to everyone, but I want to make it very clear. I do not love these signals. I'm not going to push into these signals. You can do whatever you want. I'm simply going to be risking 1R from the entry to the stop. So the first one I want to give out to everybody is EVH. EVH was a long signal on Thursday. What I'm seeing here is a hammer candle off an uptrending 50-day moving average on a heavier above average volume with green bot maintaining. Now on Friday, the stock had an inside day. But the game plan for EVH is to get long with a good to cancel buy stop level at 2047. I always add a limit offset of 1%. So add 20 cents to that. So that's 2067 for a limit, with the stop being at 2047. And I'm willing to risk down to 1874. Now, to get the appropriate share size for me, I got to take 2047 subtract it from 1874, I get that total divided into what the current 1% of my account capital is, and that's the exact share size I have on the books right now for EVH. EVH is still true. This signal is still good to go. You can set it up on Monday. You need to use a good to cancel buy stop at 2047. If it never triggers and trades above 2047, the minute that it, or the second that it, or the day, I should say, excuse me, that it closes below 1875, this trade is null and void. It is canceled and removed from the system. No go. If EVH triggers, as always, any big day up or any extension on the move, I'm taking profits and trimming and trailing stops on the way higher so I can minimize the loss in case the stock works initially, then reverses just like WK and VECO. If you think I had a full loss on VECO, you're wrong, because after the signal, I immediately put a stop here on half of the position, fails this day, no harm, no foul. WK, this was the signal. After this day, I put half of my stop here, so whenever it finally fails here, no harm, no foul. So that's how I'll be working with EVH. Now I want to show you EVH with the squeeze. So like about EVH, once again, don't love, the volatility stop is below the current price on the daily, and we're in the tightest squeeze on the TTM squeeze indicator. We were in a medium squeeze, now we're in the tightest squeeze. I love that. This is very safe entry. Eventually, this energy has got to be released. We don't know if it's going to be up or down. I'm hoping up, but if it's down, we have our stops, but it's in a tightest squeeze, and I love that. We move on to the final long. EVH has an 11% short float. So if this stock, because EVH is near its 52-week highs, can get above this resistance level, and more specifically this resistance level, that 11% short position might start changing their tune about being short the stock, which could add further fuel to the fire of any kind of EVH move higher. Now, the next long position, CMRE, this is a signal from Friday. What we have here is an engulfing hammer candle over candle pattern right off the 50-day simple moving average. Heavier above average volume with a pocket pivot point signal. One thing I forgot to say is that EVH has had a series of pocket pivot point signals in its chart, even though it didn't have one on Thursday. CMRE is actually having one on Friday and has already had a couple of pocket pivot point signals along the way. So that's good to see. Also has an increase in BOP from the day before. CMRE, once again, clear cut. My game plan. I'm going to get long at 10.15. That's my stop level. I'm going to add 10 cents for a limit offset at 10.25. So my good to cancel by stop will be 10.15. My good to cancel by limit will be 10.25. I do not want to pay more than 10.25 for it. If it triggers and fills, my final stop on the position will be 9.28, the low of this candle right here below the 50 SMA. So I'm going to take 10.15 minus 9.28, get that total, divide it into 1% of my end of day account value, and that will be my personal share size. You guys can do whatever you want. My quarterly portfolios that I run on a 90-day rotation basis, which tries to beat ARC, which it is, by the way, since the close on Friday, our portfolios are down 2, 1, and 4%. Even though the S&P is up almost 6%, which is crazy. It's a massive underperformance of the S&P 500. It's actually my biggest underperformance since starting these quarterly portfolios in November of 2018. But at the same rate, that's not the model that I'm trying to beat with those quarterly portfolios. My model that I put these under is against ARC. ARC during that time is down 19%, deals with the same kind of growth stocks. My worst portfolio is down 4%. That's a victory. That's a big fat victory. But I hold those 10 stocks, 10% capital in each, and hold for 90 days. So you can trade these any way you want. I'm just telling you exactly what I'm doing, and that's what I'm doing with CMRE. So before we end it here, let's go look at what the squeeze looks like on CMRE. CMRE is under a very long squeeze. It's a medium squeeze. It has not gone into a tightest squeeze. We even have a medium squeeze on the 195, and the TTM trend momentum is turning higher. So that's awesome. And the TTM trend momentum is even turning higher on a daily. So we have a squeeze on CMRE. We have a squeeze on EVH. Let's see if they fire. If they never trigger above the buy stop and they close below those support levels is my final good to cancel sell stops. The trades are null and void. If they trigger and fail, so be it. Small losses. If they trigger and start to work, we'll start trimming, trailing our stops higher and trimming profits off on any serious extension. The best thing that I like about CMRE, by the way, while EVH has 11% of its short float, CMRE is in a strong industry group with a group relative strength rating of 96. So I'm going to go ahead and wrap this video lesson up here. If you guys, once again, if you enjoyed it, give me a thumbs up. If you haven't yet, subscribe, ring the bell. Any kind of comments, questions, concerns you have, whatever. If you just want to, spew, feel free in the comment section below. Bottom line is, I hope these work out. If they don't, please, please, please have those stops in place. Want to let everybody know we have a Stock Twits room. It has all the quality long positions. That's the higher price stocks, higher liquid stocks available for everybody. Very low cost, but you don't get any commentary or video lessons. Gold membership plan, which is only $300 a year. One of the most inexpensive services for what you get, in my personal opinion. I mean, I see them all out there. It's a joke that I don't have more members than what I have at that cost level, but it is what it is. That gives you the commentary, video lessons, and all the new long positions. Then, of course, I have the all-inclusive platinum membership, which is only, once again, it's one of the most inexpensive products I see out there. $600 a year. You get the day trading chat room. You get the quality longs. You get the speculative longs. You get the full commentary. You get the video lessons. You get 24/7 access to me. That can't be beat. But either way, if that's of interest with you, we also have a 2-week free trial. So come and take it for a spin if you're enjoying the content in this video lesson. For everyone else, have a wonderful rest of your weekend, and I will see you back here the next time I have time to make a video lesson. Aloha.